Hey guys, Ryan here, senior trader from SMB Capital. In this video, watch an intern present his playbook for earnings, and throughout the video you'll be hearing me chiming in with some comments, questions, advice, and feedback relating to process, discipline, risk management, trade management, and more. I hope you enjoyed this video. Cheers.
I'll be doing a playbook on earning seasons, identifying trends. This is a little bit packed with information, so I'm going to try to make it as concise as possible. So just an overview, this trade is going to highlight how to identify high quality earnings to trade for day one moves, and then go over variables to study and keep track of. And then from that, I have outlined a process that helps me catch trends earlier within earning seasons, opposed to hindsight after it's already done. And currently it's being developed into a bigger idea that I'll mention later. So the variables, for the ER specifically for screening, I'm taking a very close look at the implied beat of the earnings, how the ranges are created in after hours of pre-market, what is its ATR gap up, where is it on its daily and weekly chart. And on the fundamental side, we're looking at EPS and sales growth, those beats, and if it's like a social media company that tends to have other key metrics like daily active users, that's important as well. And then another form of confirmation that there will be active participants in that name is PT upgrades from major banks and institutions. And so moving on to open variables, because within the first 5 to 10 minutes, the variables and the information that you have to weight is very different from screening for the setup itself. And so within the first 10 minutes, we're asking what is its daily average volume and how much of that have we done? What is its pre-gap ATR? With that pre-gap ATR, we market minutes before the open based on where we're about to open pre-market. 3 ATRs higher, 1 ATR lower. And the reason behind this is we'll talk through scenarios and expectations 5 minutes before we open. That way, within the first 30 minutes of the morning session, we're not doing any calculations at all, right? We just got to sit there and monitor data and get to our decision-making process. And along those lines, I've lined up some important questions that within that morning session, you should be asking yourself if you want to get involved in this trade or if you already are involved with this trade. And those questions are, how fast did price get over pre-market high? How are pull-ins bought? How does high day react? Are there sellers present? Are we stuffing? Or are we holding and compressing highs versus skipping higher? How does price hold each of those ATRs? And how is volume relative to the first leg higher, which is usually the opening bid?
I mean, I understand why you're looking at ATR, but I think a lot of traders, new traders that are watching this, are probably, could be wondering, why do you place so much importance on ATR and why is it such a big variable and part of your strategy? So, why would you say, ATR being a part of your strategy is so important as opposed to looking at something else to perhaps categorize certain moves?
Yeah, that's a really good point. So ATR is it's the key metric we use to track these ERs when we were just going through and tracking a lot of data points. And average true range is what ATR stands for, and that's just going to be within X number of days. This is like, let's say UPS had UPS, the earnings I'm going to talk about later, had an average true range of 3.3. So on any day, it could move up to 3.3 points intraday. And so we would use that number as, let's see how many of those average true ranges it can do, considering that, it has an earnings, a lot of volume, a lot of participants. And we came by those numbers after doing this research right here. These earnings, about the 23 or 24 earnings that are in here, are pretty much all from end of 2020 season. That earnings season was really, really good. And on average, just to go through these stats real quick and just so you can see what we're looking at or what we're thinking about when this trade came to be, on average, these earnings will gap up just over 5 ATRs. They'll have an implied beat of 1.6. Intraday, you'll get a 4 ATR move on average. Low of day from the open is within half an ATR from the open, and high of day is over 3.5 ATRs away from the open. And then after going through a few seasons, we also found more edge besides the day one trades like in continuation trades. So we ended up creating a data stat tracking what percentage of day one moves do these continuation day two moves do. And we found on average, you'll get about a 90% move of day one. And in terms of measured moves, we're usually looking for 50% of the first move, but this told us you can be more aggressive with a portion or a partial of the trade.
I think it's very good that you're looking at, multiple day possibilities, because, if something has a large implied move or typically just has a fairly big ATR, it also means that, it comes at opportunity cost. So it's something that moves a lot each day, probably has less liquidity, which means you can take less size, you can control your risk, not as well as something with higher daily average volume. So the fact that you're looking for swing trades is very good, because, you can maybe take, if you do swing trades, wider stops, but smaller size, but give it room to really play out as a trade versus just, scalping.
Right, exactly. That's definitely the way we're looking forward for this.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Yeah, so just to jump into an example of what we're looking at recently, a couple months ago, we had UPST, massive implied beat, and something that I want to highlight for pre-market, a lot of these implied beats that have over 2x will get run up during pre-market, meaning like it'll open up here, or after hours it'll get run up all the way up here. And this one just didn't have that, and it did its daily average volume in the first 15 minutes, and it never really sold off after that move. It just held highs, made a new high like 10 minutes later. And this one ended up doubling in 3 sessions, ended up going from like 80 to 160. And just gonna highlight 2 from last season, from the stats that I just gave you. Just wanna highlight those variables and those questions that I mentioned earlier, like how much of its average daily volume have we done? In this case, Zscaler, end of December, we did half our daily average volume in 2 minutes. And within 5 minutes, we were holding 1 ATR higher and making new highs with high volume. Ended up doing 3.5 ATR that day. And then this Pinterest trade is the trade that Brian and I did a playbook on for this earnings trade, this same earnings trade last October. And this is just very simple. 1 ATR and pre-market high coincided. And so within 5 minutes, we were over that and holding, and that was a form of confirmation for us to put on a little more size in the short term. And like you mentioned, at this point, we were in October, end of 2020, we were just looking at day one moves. It took us a few seasons to kind of figure out. We can expand on this a little bit. And that's what I'm going to talk about here. First of all, shout out Joe Freer real quick. He's the one that kind of showed us Notion to track this stuff. Before, we were just using a slide deck. But you can't.
I also just want to point out quickly the importance of like you pointed out, pre-market after hour levels used, for an opening drive play, for example. Very important to just keep track of those levels.
Right, definitely. So this is to track, more than just track, it's to sort and study. Because before we were tracking this, tracking the chart books and kind of labeling notes in Google Slides, but I'm sure most of you guys know you can't sort and study those or filter those down. And so Notion allows us to filter by any of these variables that we put into these little descriptions. I've got it sorted by implied move, and all of these earnings are from this past season. So we've got almost 20 pretty decent ERs in terms of reactions. And within each one of these, we're just tracking implied move, average or the ATR gap, intraday move, average daily range. This is just a stock characteristic we use, similar to ATR, but we use it to choose how we're going to execute a name. Average volume, what its float is, how many days does it make a new high, intraday setup. And this right here is this is what told us or showed us earlier than any other season that things were continuing. Because when you track it like this, and you're inputting data into each of these ERs that come through, it's very clear when things are continuing and things are working because you're tracking the data day to day. And so just to quickly highlight what happened with UPS's earnings, we got a beat on EPS, got a small beat in revenue, and another form of that confirmation is over 10 price target raises in the following 2 sessions. That's unheard of for these earnings, honestly. Like that just doesn't happen. Average volume 3.2 million, ATR is 3.3 pre-gap. Those are just the 2 characteristics that I'll be paying the most attention to when I actually take this trade. So on the weekly, you can see we're gapping out of a decent range. Intraday on the 27th of April, opening 5 minutes, we did 30% of our average daily volume, and we were also doing 1 ATR higher, and we got over our pre-market high. And so those are the same variables that I had mentioned earlier, that those are, like, if you get those variables, it's not confirmation in itself, but it is very, very strong. If you're watching tape and everything, just all that comes together those are moments where you can get big. And the day 2 move created a tight range under this 196, about a point, and you were able to get about 4 or 5 points intraday. But obviously this went much farther than that. This made a high for 7 sessions in a row. So I'll go through tape real fast, just to highlight that moment where you can get really big. We open, and by the way, nicey tick means that you're waiting for nicey volume to come in. Like to open, we did 15K, like we've already opened 30 seconds ago, and we've done 15K. That's just it. We haven't really opened yet, is what it's telling you. You're gonna get like hundreds of thousands of shares flowing through when we really get our nicey tick. And so here, I'm just watching spread before we get that volume. I'm gonna see if that's gonna tighten up a ton. And the scenarios we're watching here, by the way, it's either gonna have the most aggressive scenario of pull into 190, hold, and just go. Gets right over pre-market high, it's gonna go into this 2 ATR pretty fast. Or our favorite aggressive scenario is pull into S1, it's 187. Usually that happens on lighter selling, like an opening 2-minute sell down there, and then you'll see on tape selling trickle down. But in this case, we got that most aggressive scenario after a little fake out. So we saw 190 come back down in the offer here, still about 15K done. So we're waiting, and I see us start to lift. And at that point, I was just kind of interested to put on a feeler, and then I saw the 200K come in, and I was like, all right, so now we're doing volume. Now how are we gonna hold up 190? And they sold it, and so I took off the feeler. I was like, my expectation, having done 250K plus shares to the downside on the bid, is 189.70 should drop, and they should come into 187, 187 and a half, where we can start buying. They just started soaking it. There's a hidden buyer here. And so you're gonna see me get kind of excited here with my mouse. I'm like, hey, that should have sold. And so I'm just like, that's really interesting. We get turned back the other way. I put on the feeler back, and I'm like, all right, if they start buying this new highs and more volume comes in, like this is gonna go. And so I double up there, and I really think at that point I should be even bigger, but this is the first ER of the season that ended up working like this, so I'm not gonna get too hindsight bias in this. But at this point, I shouldn't see it come back under 190 and hold. And I'm watching that 192 and a half, and for that pre-market high, how fast we can get over it. And I'm also watching our daily average volume is 3.3 million, and we've done 1 million shares in the first 2 minutes. And we saw the opening move was about 250K shares lower, but within less than 2 minutes, they've overrun those sell orders and put in another 500K plus to the upside. Just a big moment of momentum. And what I realized here is I want to be risking, like I like this idea so much, I want to be risking a good amount to view up, but I was too heavy to risk everything under a wick low, meaning it could wick me out for no real reason and I could still be right. So when it drops 191 here, I take off a third of it, just thinking if it is going to get over that pre-market high and get momentum, meaning make new highs consecutively in this opening drive, it's going to make a new high on this candle. But what I'm realizing here is this moment where it pulls into 191, that's an RR moment, right? I got the volume confirmation, I got the move higher, I was watching the opening bid, I got a feeler on. That's a good point to be putting on risk-reward risk, where you're only risking about 50 to 70 cents. on that lot. But when I take the ad a little bit higher, obviously I'm risking minimum of a point. And so let's see if we can move forward here a bit to where I got risk off. We see it just kind of slowly moving. The other thing about this name, UPS, I forgot to mention, is it's a low ADR name. This is the stock characteristic I mentioned earlier. Sub 3 to 4% ADRs. We don't have a ton of momentum, and so that was something we talked about real time. So I took off about 30 or 40% into the pre-market high, and at this point I was just like, I'm in such a good position from this point against the low. I can add if we get a nice range, and so I just sat from this point. And then a few minutes later, we start expanding, like about a minute and a half later, into 1 ATR, and I end up getting flat into 196. Seeing that's 2 ATRs, and it feels extended when you're trading a name that you've bought from the open that's up 2, 3, even 4 ATRs. But I'll highlight later why or where these trades can go. Like you mentioned earlier, there's a lot more potential here. But yeah, the short-term edge we developed was just in the day one moves, but we're moving a little bit past that now. So like I mentioned, UPS made a new high for 7 sessions in a row. That's not something that I would look to repeat or expect in another earnings, but that is something that was just wildly interesting to us. First of all, UPS isn't a name that gets a ton of momentum. It's been in a range pretty much all year. For it to gap out of its multi-month and like out of that yearly weekly range and continue making new highs every day, that caught our attention.
I mean, that's something that often happens when a stock, when a large cap is in a range for an extended period of time. Once it gets out of its range, you have to remember a lot of funds and institutions that start purchasing, they don't purchase shares in one day. They'll TWAP over a period of 5-6 days. And so that's often why you get continuation. And it's something I've seen, the last 5-6 years this happens more often than you'd think, those patterns. Right. And then something else is, I mean, the trade and the tape, it's definitely good. And you spotted good trends in real time, very quick short-term trends on the tape. And the executions were great. I agree, it would have gone from being a good trade to a great trade if the stock were to base above VWAP for 5 minutes, and then you're able to actually put on some meaningful size against the low of that consolidation where you'd be wrong, for example. But the fact that it went 5-6 minutes or however long, 10 minutes straight up into 2 ATRs, that made things tricky. I would have taken, if not all of it, maybe 60-70% off as well into that up move. That's definitely the responsible thing to do. And then had it pulled back, made a higher low, and you were very confident about the position and your plan, and it was playing out according to that plan, then that would have been another really good setup to buy the higher low once it pulled in to get that risk reward. But that was good. That was you saw some good stuff there.
Right. Thanks. And like you mentioned, these trades, like, they will work and go for multiple days. But what we saw was there's no like when we tracked this trade and made this our main playbook trade, we found that it's a lot easier to be wrong in this trade than to be right. So then monitoring each season was super important to us because we got a lot of fake outs where earnings, they would have a day one move and they would have no continuation at all. Or the earnings it would look like it would about to have a day one move, make a really strong move off the open, and it would go to a lesser extent intraday. And so that's where we realized we have to be adjusting our execution styles. But when we found this to be in play, like this earnings trade to be actually bought by the general market, it would play out with stuff like this, where we get a catalyst or we get a single name that makes us look back at these earnings and say, okay, this could be a trade that actually plays out this season. Whereas like the beginning of 2021, that earnings season, we got caught up in a little bit, took a little bit heavier losses than we needed to, just because we got a couple that worked and just kind of assumed that the rest of them would work pretty well, even though we didn't get kind of a confirmation or a wild reaction like UPS that made us like look back and say, this is a change from expectations. And so along those lines, we were just thinking after we saw that report and that reaction, we knew that most of the S&P is reporting in the coming weeks, and so that just told us we need to prioritize our ER setups. If we're going to get volume confirmation, we're going to get those other variables in play, we just need to be there, like prepared to meet that opportunity. And so when we studied back after seeing EPS, we just looked back at those previous ERs that had already taken place in the season, and we did find a couple trends. First one being gap ups at a big basis were being bought, like you mentioned, they usually go for multiple days. But we also saw seasons where gap ups at a big basis are immediately sold. And so we weren't just going to be immediately buying all gap ups. We just knew we had to be screening, filtering, and watching those important moments. And yeah, the other trend was they're continuing. They're going multiple days. So I'm going to go into a few examples of how we use the trend data to come up with more trades with edge. Because, like you mentioned, like this day one move, it's a good trade. Like it's a good trade, but there's so much more edge along like this idea and that trade specifically that's just untapped for us right now. So, after we saw that, this is on May 5th, first week of May, we saw BGFV gap out of a multi-year range, and this top end being about 20, ended up going 50% 2 sessions and holding 30 for a few more. And intraday, this is what it looks like, did 30% of our average daily volume in the first 2 minutes, and that's just the sharp rejection from 20 that we got here. And then within that opening move, we were 1 ATR higher and holding VWAP. And if we look at the day 2 move and we talk about that measured move that I mentioned earlier, we were holding a range of a point on this opening base. And so that's just that's a tight range for this after a move like this. And RR wise, even a 90% measured move would get you about 4-to-1 RR. You ended up getting 5+ just because of the way this thing traded.
Well, I must say that first chart where, it opened up, let me see if I can somehow make this bigger and zoom in. When it opened up at like 2150-ish, and then it wicked down to 20, looks like 2023.
Yeah.
And then that immediate snapback and reversal, that right there that's an A+ setup. I mean, that's a stuff, whether it's the long side or downside, but that's a fantastic setup. But when I see something like that, if I'm, biased on the long side in this case, and I see that happen off the open, I'll be big size into that reversal. And if it's, if you flip the chart upside down and you get that stuff, and then, to the downside, I'll be, that's an A+ setup for me. It's great. And it came right into support, rejected, trap shorts, got longs to shake out from pre-market, and then, off to the races on the reversal. So that's a very good setup to playbook in itself.
Right. Yeah, definitely. The one thing I'd ask, I was just trying to think about this specifically, is how do I measure your risk here? Because when I saw this, I liked it a lot, obviously, but this is such a wide move compared to its ATR. I didn't want to risk the wick low, and so I was a lot smaller than I could have been, I think, because I don't think that this low should even be retested at this point.
For something like that, it shouldn't get below 2050. And so in theory, you want to be pretty quick, and once it gets to over 21, that's a fantastic buy spot. So I would be buying a bunch of 21, and I'd have a mental stop at 2050-ish, depending on how it acted down there. So I'd risk 50 cents, and
Gotcha.
And that's a small amount to be risking based on pre-market range, based on the move it just made off the open. So you're in for a nice trend, and some nice kind of outsized moves.
Right. Okay. I like that. I'll look back at that and try that
But
out.
I mean, look, I'm more the way I trade is more sort of feel and intuition and whatnot. It's not so systematic. I mean, I have my system, and that's all I stick to. But within that, it's I don't incorporate too many methodologies and whatnot.
Yeah, so that was that BGFV that happened on May 5th. This is Sally Beauty Holdings retail name, May 6th, gapping at a multi-year range, gapping at a multi-month range as well on the daily. And intraday, opening right at his pre-market high, it just took off immediately. So this was a pretty easy opening bid, got good volume, 2 ATRs in, I think, 10 minutes. So I was flat into that. And day 2, opening bid, held VWAP, 1 ATR move from the opening drive. Very simple continuation trade there. AVID is a lower volume name. we saw a few lower volume names, like 3 or 4 really good reactions from names that acted similarly to this. So I wanted to highlight how this actually goes. The setup looks really similar on the daily, but intraday you got to be expecting something different. It's got a much tighter ATR, and to open, its ATR or its spread was a point, with just over a point pre-gap ATR. That's a problem.
Already cut you off there. Do you want to? Will you go back? I think it's like 2 slides.
Yeah. To Sally Beauty Holdings.
Yeah, one more. So yeah, that one. Go one more ahead. The day 1, day 2 chart. Yeah. So that's, I mean, related to this as well, but mostly with low floats. And this is an amazing setup for a potential squeeze. You have a low float gaps up on day 1, same chart as SVH. Goes up, comes off, closes below VWAP, relatively weak or perceived to be a weak close. The next day, the stock holds above the previous day's high the whole day. So longs are trapped, shorts are trapped, longs are in the money. And that's often where you'll see a really nice after hours squeeze and potential madness the following day. So that's a really nice setup. In this case too, for a medium large cap, it could be, I don't know what happened on day 3, but it looks like the setup is there for continuation on day 3. But with the low float, this is for the long side, A+ setup.
Right.
Anyways, I wanted to share that, but yeah, sorry to cut you off.
Yeah, that makes sense. Yeah, I don't count as like for the large caps. I don't see the shorts as positioned, but I'm sure that was definitely a variable for that one. AVID, the lower volume name, like I mentioned, less than 500K volume is what we're classifying as lower volume. It did 20% of its average daily volume in 2 minutes, but its ATR, its spread was almost its full ATR pre-gap, and so that was just something that made it a little bit more difficult to put on size in this one, but it quickly did an ATR in like opening minutes and held higher, and then day 2 held higher again, and first VWAP pull held and made a new high. Very simple continuation trades. And so, like you mentioned, making this into a bigger trade, seeing that there's a lot more to get involved with here. Just to highlight, the goal is not to catch highs or lows, but what I'm realizing is when we do manage our risk in those best case scenarios end up being super important inflections that I think multi-week, multi-month trades can start from there. And like I said earlier, like it's so easy intraday to say, oh, this is super extended, I should just dump it here. And I think, like you said, it's responsible to be dumping most into like those ATR targets, like at least 75%, I think, because I think most of our edge is just is in the day 1, and we're still creating the rest of this trade. That's going to be a bigger trade, but right now, I'll just show some instances where it's kind of clear that. Not clear, but it's clear that I'll just show you the trade.
Yeah, I mean, in the future, like whatever size you're using for a trade that you really, in the morning before the market opens, you're just super confident and excited for this trade, and your gut's telling you that this really could be a nice one, a juicy one. Whatever size you'd usually take, just put on an extra 25%, and then that 25% isn't the day trade. That's the if this works, that's going to be the position I hold for 2-3 days, sort of a thing. And then treat. So say you have 100 shares, put on 125 shares, trade the 100 shares as the day trade, as your system tells you to, and then the 25 shares is there for the potential for it to turn into a swing, and then you have a nice core position. If the stock closes strong, add another 25 shares, take 50 shares overnight, sort of a thing. But bigger picture doesn't make much of a difference whatever extra 25% you put on. So you might as well do it and start playing around with the swing trading idea.
Right. Yeah, I'm much more comfortable in those continuation moves like day 2, day 3 now. So I definitely see how that could play out well with my system. For these specifically, we're looking more like much higher time frame. So with this one, I was buying this day 1 move with about a 165 average, risking 2 points to the low. And I'm not thinking that this is going to create this range, right? And, have a measured move twice higher, go to 230. I'm at this point, like intraday, I was only looking at this intraday move. Like I could get, my targets were like into 180, and I was like, all right, that's it. But after looking back at some of these charts from these earnings that we traded in the last earnings season where this setup outperformed and told us, hey, this is in play, there were some really, really good inflections. So I'm thinking of trailing 5 or 10% to the 10 moving average on the daily. And that's just an entirely different swing trade than the momentum trade that you mentioned. But I'm more confident in the momentum trade. This one is going to be more of like, let's see how it bases and holds like a range higher, like it did here. And so this was Zscaler, like I had mentioned, from December of 2020 earlier. You guys saw the intraday reaction upward from, I think it was November. Yeah, November of last year. I was buying this 27, I don't know where the error is off, buying this 27 average here. I stopped out. I got stopped out a few days later. I ended up swinging 30% of this because I ended up really liking this earnings. And I felt like this could go. But see, like if I don't have the instances and I don't have all my expectations and scenarios set in front of me for how I should take the swing trade, this is just gonna happen. I'm gonna get stopped out at the lows pretty much every time. But I think next time trailing this to the 10-day on a much smaller portion and having a larger portion for day 2, day 3, it's the best way for me to try it out.
Yeah, and also, with screen time, you'll get better at that because you'll know where the stock could go if you are right. And then you'll place your stop a little bit different on these swing trades. You'll give it some more room because if it works, again, it just comes with screen time and experience. You'll see things play out and your trades play out a lot bigger and a lot better than you thought. So naturally, that will take care of itself, I think.
Do you have any other suggestions though, while we're on that topic of, besides screen time, studying more behind that screen time, getting more reps with those learning experiences to just get more from the screen time?
With the earnings experience, well, so I didn't do, I don't trade really earnings. I'll trade like price action momentum, but I don't trade it with too much excitement. But with low floats, what I did was like 6 months in, 1 year in, I just started making lists of, from speaking to people, of like the top 10, 20 low float trades of the past 3-4 years. And then I just studied all of those. So, there's so many people at the firm that trade large caps and earnings. All you have to do is ask them to go on their info center or trader view and, give you a list of like their top 15 or 20 earnings trades from last year. And then you can go and look at those because it's impossible to find that out by yourself. There's way too many, 7,000 stocks that report earnings every 3 months. So it's hard to, so you want to just find out from a trader the top 15, 20 movers that they had last year and find that out from 5 traders. That's 100 different trades, for example. And then you can go through all of those and playbook those charts, create a book of charts and get some screen time. That's what I did with low floats and it helped so much. It definitely sped up the process.
Right.
Because history repeats itself.
Mm-hmm. Definitely. Yeah, this is just Stitch Fix, really solid ER. This is one of the ones that I studied a little closer because this doesn't happen often, where it makes this kind of move. But last one was TUP. Pretty simple. I'm risking just over a point, and 10 moving average daily stopped me at about 30, about 3 or 4 points higher. That's all I have for this presentation, but that's just generally how we're looking to make it a swing trade and a higher time frame, improving that past the day one and past the continuation trades. That's more speculative still going to try that out.
It's fantastic, Dylan. I think it's great. Yeah, you guys are doing a really good job, and I think it's awesome that that sheet that you're using, you kind of filter through your charts and setups. It's fantastic. It's really good. Yeah, well done.
Thank you.
Yeah, it was really good. Then this is a strategy that you can scale up over time. With options as well. So it's if you find that there's consistency and edge over time, you can really put your foot on the gas with this, and the sky's the limit.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.